With all this terrible news coming out of the Ukraine, I thought I'd take a quick peek at what's been happening to the Russian stock market and the broader financial impact to its economy. As you can see here, in the run-up to war, things started melting down for companies in the Russian Federation, but really went haywire after Putin declared 2 regions in Ukraine's Donbass as independent on February 21st. 3 days later, he followed that up by announcing a special military operation into Ukraine, which I guess is a douchebag code word for invasion. The irony of invading a sovereign nation the day after Defenders Day isn't lost on me. After early signs of Ukrainian resistance proved that this wasn't going to be a stroll through Red Square, the market was halted on February 25th to stop it from, exsanguinating, and at last update is set to be shut down until at least March 8th. To confirm this though, you'll have to check out the press release since the website is, yeah. Anyway, the hit across sectors was pretty broad-based too. I want to say materials held up best due to strong global demand, potentially allowing for a bit of a sanctions window, but still nothing to write home about. Well, financials got super crushed. Not exactly sure what a bank is worth that isn't allowed to, bank, but it's probably not very much. After the Russian market shut down, trading of depository receipts continued on international exchanges, at least for a little while until they got blocked too. And that's where things got bloody. Depository receipts aren't a perfect indication of where things will open back up in Russia, but if it is, that market could be up for another leg down, or multiple legs, and a torso. Sheesh. And I know the ruble is like monopoly money at this point, but we're talking about some big cash here. I mean, damn, that's Zuckerberg level dilution. And quickly, if you're enjoying this video, please hit the like and subscribe buttons below. I'm just starting out, so it really helps to get some momentum for the channel. Okay, back at it. And while you may not be feeling too bad for oligarchs getting their yachts impounded, most of this lost money belongs elsewhere. For example, using the Cyberbank example, 66% of its ADR holders are American. Most of these investments come in the form of investment firms, say a mom and pop mutual fund, picking up emerging market or regional exposure. And most of these big holders have names you'd be familiar with too. Now, even with trading presumably starting back up soon, a lot of funds are kind of in limbo at the moment. For example, Russia's weight within the MSCI emerging market and the EMEA indices, one of the global benchmarks asset managers use to peg their returns to, has been steadily diminishing over the years. But with the onset of hostilities, Russia has officially been dropped from the index, with FTSE and S&P also kicking Russia out of their indices as well, which I didn't even know was a thing. Meaning that additional rushes to the exits may occur once they're permitted. And I'm not completely sure what standalone status is, but it sounds pretty lonely. Beyond the off-benchmark trimming, large asset managers seem to be scaling back for reasons going as far as moral grounds. Shocking, really. Including Norway's Norges, the world's largest sovereign wealth fund. And it's not just the shares that got pounded. Bond markets are, for the most part, still trading in Russian securities, although not all of them. And it's none too pretty there either. I can sleep okay at night having bought an oil ETF before the invasion, but this is a bit more of a morally gray area for me. On the economic side too, things aren't that peachy either. JP Morgan estimates that Russian GDP will contract by around 35% in the second quarter as a crushed ruble, import sanctions, and softening domestic demand hamper economic activity. And in my opinion, just as important as sanctions is the growing list of companies either fully or partially pulling out of Russia, which seems to be growing by the second. And while it might be annoying to the Russian people missing out on the next Sonic the Hedgehog movie or a new Adidas tracksuit, a Slavic favorite, but not being able to service your trucking fleet or properly maintain your aircraft leads to real economic bottlenecks and delays all across the supply chain. Not to mention that the economic backbone of shipping and logistics can have serious financial consequences domestically and on the export front. Dude, remember when we weren't always talking about supply chains? Outside of Russia and the Ukraine, things could be getting progressively stretched. A rumored US ban on Russian petroleum would be more of a token move rather than anything, given the US's near oil independence, but Europe gets nearly 30% of its oil and gas from Russia, so there are tough decisions to be made in the old world. With commodity prices spinning out of control and the potential for protracted impact to price levels, this war is going to keep touching more and more people. Let's just keep hoping for cooler heads to prevail, and most importantly for the health and safety of those brave Ukrainians. Alright, so that's my quick update on the Russian stock market and its economy. I hope you found it informative, and if you did, please give it a like or consider subscribing for more informative and hopefully entertaining financial content. I'm Ryan, and thanks for tuning into Market Lab.